Hey everyone, welcome into our latest Trade to Black podcast. I am your host, Shad Dales, and today we're going to dive into a topic that every cannabis investor needs to understand: the real cost of cannabis stocks. Are cannabis stocks still a good investment? Why have so many of them plummeted in recent years? And most importantly, how can you position yourself in this market? Stick around because by the end of this video, you're going to have a better understanding. So with that, let's get into it. So what do we mean by the real cost of cannabis stocks? It's not just about the price per share you see on the stock market. There's much more to unpack. The real cost reflects the broader issues impacting the sector, from operational efficiencies to financial constraints. One big question I hear all the time is, why have so many cannabis stocks plummeted? To understand this, you need to look at factors like price compression in key markets, regulatory hurdles, and the overall state of the economy, which has made it harder for cannabis companies to scale profitability. All this creates downward pressure on stock prices, even for companies with strong growth potential. So let's now talk about the issue that often goes unnoticed by retail investors: the crippling tax burden that cannabis companies face under U.S. federal law. One of the biggest obstacles is the Section 280E tax code. The outdated tax provision prevents cannabis companies from deducting normal business expenses like rent, payroll, or marketing because cannabis is still federally classified as a Schedule I substance. As a result, these companies end up paying taxes on gross income, not net profits, leading to effective tax rates of up to 70% or higher. To put this into perspective, a regular business might pay a corporate tax rate of 21%, but cannabis companies face significantly higher rates because they can't offset their taxable income with operational costs. This creates an enormous financial strain on even the most successful operators and severely impacts their ability to reinvest in growth or achieve profitability. When you factor in this tax burden alongside other industry challenges, it becomes clear why so many companies are struggling to deliver shareholder value despite increasing revenues. This leads us to the key question: are cannabis stocks still a good investment? The answer isn't black and white. While the sector faces significant challenges, including debt burdens and capital constraints, there are companies adapting and positioning themselves for future growth. For example, some operators are using disciplined financial strategies to manage debt while expanding strategically into emerging markets like Germany, Florida, Missouri, and Pennsylvania. But as an investor, you need to do your research. Look at a company's balance sheet. Are they reducing debt? Are they managing costs effectively? These factors are critical when evaluating whether cannabis stocks are worth your money. Another thing to consider is how operational challenges impact the real cost of these stocks. Why do so many companies struggle with profitability? Issues like cultivation costs, supply chain inefficiencies, and price compression are all significant hurdles. For example, in 2024, some leading multi-state operators reported stable retail revenue, but declining wholesale numbers due to price pressures. Margins can fluctuate significantly depending on market dynamics, and companies need to adapt quickly to stay competitive. This is why knowing how to interpret earnings reports is so important. Are retail operations outperforming market averages? Is the company scaling efficiently? These are questions that you need to ask. So how do you buy cannabis stocks in today's market? First, focus on companies that are leaders in their core markets and have a clear path to profitability. Look for indicators like consistent revenue growth, operational efficiency, and strong retail performance. Companies entering international markets or positioning themselves for federal legalization could also offer significant upside potential. At the same time, keep in mind that diversification is key, not putting your eggs in one basket. Look, we cover a lot of companies here at TDR, so look at companies from across the industry that have different strategies and market focuses. Patience is critical in an industry as volatile as cannabis, something that many who already follow this industry know all too well. So to sum it up, the real cost of cannabis stocks isn't just about share price. It's about the understanding of the financial and operational and market challenges that are shaping this industry. Ask yourself, is the company managing debt effectively? Are they staying ahead of industry trends like price compression and regulatory shifts? The cannabis market isn't for the faint of heart, but for informed investors, there are opportunities to find value. So pay attention. That's it for today. We want to thank everyone for watching our latest podcast on the real cost of cannabis stocks. Don't forget to like, subscribe, and smash on that bell for all notifications. And let us know what you think is the real cost of cannabis stocks and where you see challenges and opportunity. We'd love to hear from you. As a reminder, stay connected with us here at TDR, stay open-minded, and I'll see you next time on our latest Trade to Black podcast. I'm Shad Dales, and thanks again, everyone, for watching.